Good afternoon, everyone. It is Monday, January 6th, 2025. Morocco right now, because he's being annoying. He'll probably scratch the door soon. My Eagles are playoff bound. Congratulations to us Eagles fans. Okay, so market is also looking good after some of the stuff we said last week. We said semis looked like they were getting ready to go, as did some of the Mag 7 and Bitcoin, and they both ran today. We'll take a look at the relevant charts. Today was a global day in terms of, Europe was really the belle of the ball today. You'll see what I mean. Let me share the screen without further ado. We got some nice graphics here. Hope everyone had a nice weekend. Some more snow today here on the East Coast. So that's cool if you like snow. Not enough to make a snowman, but enough to be, I guess, frustrating. Okay, so today, interesting. Some of the stuff that we usually talk about. Take a look at the graphic here first, but Euro stocks, a nice jump today. Nat gas up 10%. We were talking about this. It looked like it was showing its stripes again to the losing side, and today a massive rally in UNG up 10%. We'll see if you guys were on either side of it. If you got a ticker, drop it in. I'll take a look. And semis ran. They got right to that 260 level in the SMH I've been writing about last week and that we've been calling out. I think it, I've said before, I think it runs out of steam right around here and we're range bound. But we'll see. I believe Jensen Huang, CEO of NVIDIA, speaking in a few hours, his CES keynote. So a lot of, NVIDIA ran today. We'll take a look at a few, of the movers, what happened there. TSM, there's a lot of strength in the SMH and semis today. And then India, ugly looking chart today, a nice drop today for that, as well as staples. So hence why you see some European flags here, and that gas carrier there, and there you go. All right. So without further ado, let me go to the charts here. Let's go intraday first on the SPY with some of the tickers. Let me do this first. Hold on. That's me. Go birds. Where are we? Here we go. Yeah, NVIDIA up 3.5 going into the CES announcement. MicroStrategy up 11.5% on that. I believe it was a convertible bond deal, but Bitcoin is also trading well at 102K. So that's looking swell. Broadcom was up 1.6. A bit of a sell-off today in Palantir, but it's been, the stock of 2024 last year, down 5%. Meta up 4%. That's a monster move that pushed up the mags. Amazon up 1.5. I think Microsoft was up 1%. Apple up. It pulled back. Markets, as we'll look at, pulled back towards the end of the day. Micron up 10%. Taiwan Semi up 5%. And yeah, your double leverage ETFs. You had this up 9% to 3 times ETF, and Coinbase up 6%. So a lot of strength in there. As we look at the intraday chart, so here was the open, this bar right here. Yep. So we peaked right around 11:30 a.m. Trading was looking good there. It was all buys up until 11:30 or that European close, and it was actually all sells, and we really gave up the ghost. At about 12:30, we started trading under VWAP and started looking ugly here. I wouldn't say ugly, but it looked like the peak was behind it, and we ended up selling off and closing below VWAP. So not an amazingly strong day in terms of SPY. IWM actually did flash from green to red. Nice support here. This is a 200 bar moving average. So I didn't think the bottom was going to fall out or anything like that. I thought we could potentially sell off to 593, and then have any kind of upward movement would drag us to 597, and we'd have trading here right around closing at 595 on below average volume today. Don't forget Thursday, the markets are closed for Jimmy Carter. So another short week. And then I believe the following week after that, it's a short one because of MLK. So you're going to get a bunch of truncated market moves. So in terms of the market, like I said, I didn't think this was going to be a direct move. I liked the double bottom here at 580 for a buy. I do see a upward bias here. It's not as clear as I see my typical accumulation distribution phases. Is a little bit messier here with this almost W formation. I'm targeting around 605 to 610, but it could take a couple of weeks. There's going to be pretty decent resistance at the 600 mark. So I want to see how the market trades then and what exactly gets rotated. Is it the tech that really gets a bigger lift up? Is it the opposite? Is it more Dow stocks that really were not in favor today? So what is the bell of the ball, as it were? But upward bias, I would say, for the next 1 to 2 weeks with choppiness, and I would say we're headed towards 600 to 605 in the SPY. All right, let's get to what really moved today. Some things you care about. hopefully all things are somewhat relevant and charts that maybe you wouldn't have seen before. Europe, big today. Obviously, I know Trudeau resigned as a PM of Canada, but really big move today was Euro stocks up 2.5%. On a couple people's radar, I think was France was hitting 52-week lows. There's lots of interesting movements happening under the hood. Europe has looked pretty ugly. If you looked at this chart, I think you've been watching the show hopefully enough by now, and please subscribe if you're interested. I probably should say that more than one time. But this has been an ugly group. A nice rise 200-day moving average with a high at the end of September, and then really, again, you know how big I am on the close under the 200-day moving average. That first happened for, go figure, the day before Halloween, so October 30th. I would have given this one till mid-December to see where it's at, and then to be frank, what it did by mid-December was the best it could do was 50. And it was starting to decline. So I don't like the European story. You got a nice 2.5% bump here, but I mean, this was essentially very near to 52-week lows while we're having many areas in the market reach new all-time highs depending on the geography. So don't love this area for long-term investment, but I do think finally it's begun a little bit of a dead cat bounce, if you will. I think it's going to try and make a move towards 50. I think this 200-day moving average will prove to be too heavy for it, and probably will embolden for the short term more concentration in U.S. investments. So people will more draw near to the NVIDIAs and the Microsofts and the Apples when Europe looks like this. So yeah, expect a little bit more of a rally. I see it pushing towards about 50, maybe a touch more than that. It did a lot today. Don't forget the CTF was at 48, last week near the low. So Europe, a big move today. See it going for a little bit, longer, making a move, like I said, to the 200-day, and then no bueno after that. All right, so let's look at nat gas. What a monster today, up 10%. So this is craziness here, the 200-day moving average. So I thought I had said before that this distribution had begun, and the 17 handle was not going to happen again. As you can tell, this says 1.7 on it, and we've held. This is very interesting to me that we held the 200-day moving average now all the way going back to essentially December 18th. It's pretty crazy. It touched below it, but it closed above it, and then here it got a rock's throw, but it's still holding. So almost in the opposite way. My 6-week test is I want to see where this is by the end of January. This continues to chop and holds this 1530 level. I'll be very, very shocked. And like I said, just simple Fibonacci 1 year 50% retracement can get you to about $20 on this one. So that would be a nice move from here. You saw some upside. Want to see it, like I said, that obviously the velocity is not dropping anymore, as it were. Back here, the black line here, that you see the prices was really rolling over, and now we're flattening, and the 200 moving average actually going up from 1529 to 30 to 1531. So an astonishing kind of basing here in that gas. I still think it gets distributed over the next 1 to 2 weeks, but down to about 1540. I think this is actually going to hold the 200-day moving average. I think we may have a significant change in that gas. When I was writing my pieces for last week in the 2024 trades of the year, that gas for most of the year, I used to call it the king crap, essentially, just due to how easy it was to sell on the 200-day moving averages. It's just a dog, and now it's surpassed through, and it's trying to get out at these $21 highs if it can. During the worst part of the year, it was down 35%. It was one of the best shorts in the planet. And then it closed down the year down about 11 or 14%. Very, respectable for a piece of crap like this. And now I do think it's changed, potentially changed its stripes. We'll learn a lot more in the next couple of weeks. And then I'm not going to chase it here, but potentially very much another week or two. If it holds that 15 handle, I would go either long buying UNG or, maybe like, it depends on the liquidity of the calls, and maybe do something in March spreads. But that's something I'd be looking at. It does look like they're having a bit of a sea change here in UNG. All right, enough about that. Something that obviously really controls the market, huge pillar of it, the semiconductors. We were talking about it, writing about it. It was your leading space after Bitcoin of 2024. I'd said if you can get into the SMH, this is heavier NVIDIA and Taiwan Semi, makes up, I think, 25% or something like that of this fund. If you can get an SMH at 242, I thought your risk was relatively very low. I bought this the day after New Year's, and it has catapulted immediately in about 3 days to 261. the heaviness I've been saying is immense right at that 260-ish level. To be honest, I think this is depending on tonight. That's why I hate getting cute with events kind of thing like that, because it's not earnings for Nvidia, but they're saying they have big expectations on cost and revenue. Expectations from the Nvidia announcement tonight. So we'll see if it pushes towards this in after hours. But as you could tell, we have not been broken above 262 in SMH since the almost dog days of summer. It's mid-July. So I think it gets tired here. It might push above. Another scenario as well is it pushes above right around here. Again, the velocity behind the Nvidia event makes me think that it can either go over here, maybe something that's 270, and then these are potentially in play, the all-time highs for semis, and then obviously that'll drag your beta and market overall higher to new highs, or was that the run? We'll see. I see messiness in the market still with an upward bias, but I could potentially see this going, higher, lower, but I did not think this was going to give up the ghost, again, to use that phrase. The 200-day moving average, if you could buy the best performer of not only the past year, but obviously semis have performed very well in the past 5 and 10-year look back in this economy, I think you'd be silly. It would behoove you you had so many chances. The thing was a dog going back from before Thanksgiving. So we'll see. I think it'll come back down. I think there's a lot of osmosis and magnetism dragging this down to about 245. If it does give up here, I think you potentially get another chance, but we'll see. But a big day today, up 3% for the SMH today. So if you got that one, good timing on that one. All right, next, losers. India down 1.4%. So I had happily I had a call spread and this expire in December. Thankfully, good riddance. It was a bad trade. India peaked in September here at $59. It was just really a great looking chart up until right around the week after the election. You could say if it was the opposite of the Trump bomb, if something different was over there with Modi and the politics there. But look at the chart. Never once wavered on the 200-day moving average. Beautiful curvature and slope, bottom left of your screen to the top right. And then that's even fine here. It dropped. I remember this in September. It dropped very quickly. September 26th, all the way to October 7th. They went from the top Bollinger Band, which is a 52-week high, all the way to the lower Bollinger Band in about 2 weeks. Not typically something you want to see. And then on the rallies after that, it could never get above its 21-day exponential moving average. So not typically, something of strength. It was holding it here. And then, like I said, the week after the election, it kind of got ugly. And then it had a bit of a rally. And now it's starting to look ugly again. I don't think your risk reward is terrible here at 52.50 levels first traded to in last April. I don't hate it, but the 200-day moving average, just while still rising, barely, it's slowing down at 54.85. I think it's going to prove to be heavy resistance for it. So I think it's going to be frustrating. So I think you have a kind of a bottom here at $52. I think in terms of risk reward, and I think this could pop on any reason to 54, potentially 54.5, and then go lower. So not super attractive considering what's going on in other parts of the market. Similar to that regard, Staples got down 1% for Staples as its teeth almost getting kicked in. Very similar chart, right? So beautiful, right, is what I'm saying. Not a couple closes here. The low was last January, and then all above the rising 200-day moving average, hits its peak in mid-September, right, the week of the Fed cut. And then kind of similar that it dropped to the lower Bollinger Band, and a couple weeks later, obviously, consumer staples was a lower volatility area. And then only rallies brought it to the top of basically its 21-day exponential moving average, and then lower. This was outperformance here towards the end of November, and now we're oversold for the first time all year in staples. You don't like to see that. That means there's a more line of sellers than buyers. This is not Taylor Swift selling out the stadiums anymore. This is, Vanilla Ice playing Denny's. There's no one that wants to see this, okay? So there's a line of sellers here, and the chart, the bar looks ugly here. It closed at the lows down 77. Tells me there's a little bit more to go. Kind of similar to India in that I like the low. I don't think, well, hold on a second. My screen just... I thought this would base around 78. I didn't think the pain was going to be much more after that. Again, I still don't. I don't think it's going to be horrendous. Bounces on this will take you to 80. I think this will frustrate investors as well. The 200-day moving average is still continuing to rise, actually, which is pretty interesting. We are quite removed from its 52-week highs 4 months now. Yeah, I think this is going to frustrate. This area is going to frustrate investors. I'm glad not to be in it. I think you have from risk reward. I think 77, 76, probably closer to 77 or 76.5 is your low. Basically taking us back to these April and May highs. And then the top, I would believe, is around $80. Why I say it's especially going to frustrate investors, I believe, is I think it's going to go above this 200-day moving average, oscillate around it, and then below again. So I don't think this is the area to be. Okay, and then another one similar, utilities. I thought my Apple Watch told me I was talking too long. Nope, just some Uber promo. So here's utilities. Also got its, I don't want to say teeth kicked in, but down 1.1. So this out of all the charts that we just looked on the downside looks better. So rising 200-day moving average, it got a little bit scary on April 16th. Overbought performance. You did get oversold for the first time December 18th, but still holding a 200-day moving average. So it wasn't a total, strike, as it were, in bowling where everything got knocked out. The peak was Thanksgiving week at 83. 200-day moving average is here at $74. There's definitely worse spaces that you can be in. I think this has had like a nice run though from this. Again, this is utilities. So I think it's had a nice run from 75 to about 77. And I actually think this is going to not aggressively sell off, but I think this starts to move back towards $75. So again, not a super exciting area, I don't believe, in the market over the next, 1 to 2 weeks. I would rather be long than short, but I don't think anything off to the races. Okay, top 3 gainers of the past 5 days, no repeating charts. Nat gas, number 1. Obviously, much of it today, but up 9.5% in the past 5 days. Congrats if you were in that. No comment. All right, next, IBIT, up 8.5% in the past week or 5 days, up 8.5%. We're going to look at the ETF. Obviously, Bitcoin is about 102K. I tell you, I don't want to turn into like a maxi person, but I do a lot of different calculations. I know they obviously don't mean a lot in terms of especially Bitcoin, but many ways I get at it. It's 150K by July 4. Many different ways through RSI, further out projections, and Bitcoin actually tracks it really well. So like putting a 90% RSI, which it hits about 3 to 4 times a year when that euphoria hits, where that price is, you can calculate that now. In addition to just annual returns, and then you splice it for where it would be quarterly. Many different ways. So I get to like that 140 to 160 region by July 4. So this thing, and it looks really good now. So again, looking at IBIT, I've been talking about it last week. I thought this was getting ready to go. If you could have gotten in this one around $55. Below that, I literally said that I think last Friday in the video, I thought it was a gift. It's going higher. My target is about $60, $62, right around there, short term in the next 2 to 3 weeks. Today it hit 58.46, then it pulled back some. You kind of have a sort of a similar movement from what we had in the other chart as well, this W here. I think it's going to try and go higher here, and you get some vol expansion too as you get bigger candles. And we'll see what happens into the inauguration. I know a lot of people are talking about more about the Bitcoin Reserve and all that. The thing's doubled conservatively every year since its genesis 16 years ago. With basically like 3 out of 4 years with crazy returns and the one horrible drawdown, and that's through a pandemic. And the tail end of a global recession. So you just got to stay long, until the tulip mania ends. But this thing looks strong. If you don't have Bitcoin, I would allocate. BlackRock says 1 to 2%. I think you can get, your risk. But I don't think there's anything wrong with like a 10% allocation. If you're 100%, I would, put down the crack pipe. Okay, so that's IBIT, second best performer of the past week. Like I said, so this thing I believe is going to about $60, $62 in the next 2 weeks or so. And just so because a lot of people, I guess, hold the actual in, Coinbase, a big run today. That would equate to right around, so the high was 108K the week before Christmas. I'm basically seeing it right inside there, 106, 107K, right around there. All right. And Bitcoin having a good run here, up 8.5% in the past week. Next, ARKG. This is, tracks loosely with biotechs, but this specific basket from Cathie Wood is having a nice week, up 7%. So again, messy chart, sliding lower is the 200-day moving average. It's going above it here. Look at these candles, right? From the bottom here, it was $23 just 2 weeks ago. And this is a volatile group. It can move. And now it's all the way here. It was up a lot more today, actually. I still like this one to about 27 bucks. I think it has a little bit more room. And then I do think it'll trade lower to about 24. So volatility for this group. This is what I was saying. Basically, if you put a narrative together from all these charts, it's messiness. It's not specific groups. There's more to fall. Could potentially new areas lower in India. The semis tap out here? Do they go higher? Do folks rotate into losers like a nat gas or Europe? So there's a little bit of messiness under the hood, but still with an upward bias considering the market's track record. All right, there are some losing areas though, and we will wind down. I haven't taken a breath yet. ASHR, I did not get in. I think I was talking about this the other day. I wrote it down here. I said long ASHR Monday, ? 2540. So here's the chart. Did not like the action. I did a little bit more analysis on it today. It was actually just flat today. I still believe that your risk reward is minimal here at 2530, the 200-day moving average. And it probably will lift to 27. That's a nice mover. But I just didn't feel compelled to pull the trigger on this trade to get long this area. Potentially it stalls. I just didn't think overall it was a star. But if you don't have a position, I don't think you're going to get screwed on this. I think it bottoms here. I like that support it has at around 25.30. And I do think it heads to about 26.80 in the next 2-3 weeks. But it's going to be messy, probably messier than most given its track record. So, and I didn't love the overall relative strength. It's been mostly spending time under the 50 RSI. So if you think of that, Vanilla Ice, Taylor Swift mentality, selling stadiums versus, can't sell at your living room. When you're above the 50 RSI like this and mostly spending more times below it, this is like a one-hit wonder. Here it had, a nice 3 days in December. Here had, prolonged movement, but nothing really overstretched. So everything's kind of like fairly priced to me. It's not, you're not going to make a ton of money scalping tickets. If you couldn't tell, I go to a lot of concerts. So that's kind of my speak, that football. So really, really eccentric. Yeah, so you could make money on this. I would do it just for a trade, but it's going to be messy. Be careful with the options. I did look at it today, though. Probably goes higher. I thought there's better probability bets. But it's having a nasty week, down 6%. It could get to 26.70 or so over the next 2 weeks. Like I said, messy. Not a lot of losers. I really had to focus. I like to keep it, differently correlated. But the KWEB was down 1.7 today, and it's their second biggest loser, obviously correlated with China. Sometimes you can glean insights when you focus on a sector as opposed to zooming out. So let's take a look. So KWEB, I looked at the ASHR strictly. So here's the 200-day moving average. It's now below it now for since January 2nd. So the year has not started out wonderful for Chinese equities. Did not like the action of almost visually the ball rolling off the table here. Yes, it did get to 34.5 essentially both times, but I just don't love the action. It looks like there's better here. Again, above 50 RSI, just glimpses. It had that good week in December. I just don't overall like the price action and stochastic momentum mix. Not going to get into it, but it's not really holding above zero. It just essentially when it falls out, it really falls out. So similar to what I said for ASHR, I think this rallies to 30 in the near term. I think your support at 29.10 or so proves. I'm actually surprised by the weakness here, but it's going to be messy. I do think this ultimately is at 30 even in about 2 to 3 weeks. Going to be messy. I know I've said that many times. And last one, did we look at this one yet? Hold on, because I do not repeat charts. No, we didn't. Staples down 2.5%. So, I mean, when that's one of the things we're talking about is worst of the week, China down 6, KWEB down 4. So the broader China is performing worse. And then Staples down 2.33% with down 1%. Again, so look how many charts we've looked at where there's major movements right here as we speak with less than a week in it. With the 200-day moving average. So Staples, good looking chart, not once has been below the 200-day moving average, peaked in mid-September, week of the Fed cut. A lot of things changed that week psychologically for the market. And then Vamush, if that's a word, 2 days before Christmas, closes under the 200-day moving average. An ugly, ugly candle today and oversold for the first time all year. Yikes, not an area I would like to be in. You don't like to see those recordings because usually 6 months lows and stuff like that follows. Again, I thought the support was going to hold around the 78 mark. I thought it was going to go below the 200-day moving average just a little bit. It is still rising. It's going to flatten soon. And I think bounces would take you to 80 on this, but you probably need like a counter move in the market in terms of you need fear in the market, a rally in the VIX, and then people would cling to stuff like this in the staples. But the individual components of this, Pepsi not doing well. I believe Hershey's is a component doing awful. So folks are getting out of this and just snorting more NVIDIA essentially. It's just the truth. So that is the case for staples. Like I said, probably goes to 80 in the next 2 weeks. Gonna be messy. So not the clear, overall forecast of just, straight bullish, buy long calls. I do think we will go up to the upside, but it's going to be frustrating and difficult, specifically for this next 2 to 3 weeks. And then we'll go from there. Trying to think what else. Oh, yeah. Have my webinar on Wednesday for CMT. Go register. It's going to be similar to this, but more dragged out. So more me talking. But no, I'm going to go through a lot of different important ETF groups. Oh, yeah, my iWatch says exhale. All right, peace, and we'll see you next time.